Welcome to the Bulletproof Cashflow podcast, the go-to place to gain financial freedom through real estate investing. Here we interview investors, mentors, and entrepreneurs who share their secrets and advice to help you build passive income. Let's get into the show.
Hey everyone, this is Agostino. Today we're covering a topic not directly related to multifamily, but instead has more to do with land and business development, specifically around cannabis production. According to a Quinnipiac University poll, roughly 63% of Americans want full cannabis legalization. 93% support medical consumption, and the drug is actually legal in 9 states plus Washington, D.C. So as you can imagine, there's an opportunity as far as getting into the space, especially as it relates to developing land. So today's guest has a team of cannabis, legal, finance, and real estate experts that provide the funding, infrastructure, and property for cannabis entrepreneurs. She's a longtime entrepreneur herself with extensive experience in real estate, having developed and managed more than 500 units, including a mix of warehouse, retail, and multifamily properties. Identifying the emergence of the cannabis industry, she and her team created a platform and a company called Basecanna to build this business. Specifically, they have an ecosystem of cannabis operators for real estate developers and entrepreneurs. So with all that, I'd like to welcome Leslie Plettner to their show. Leslie, thanks for coming on.
Thank you, Agostino. I'm excited to be here and speak with your listeners today.
Excellent. So before we go on, if you like what Leslie has to say, you can reach her via email at lplettner@basecanna.com or subscribe to the newsletter at basecanna.com. I'll include the links in the show notes as well. So, okay, Leslie, go ahead and tell the listeners about what you're up to.
I am participating in the cannabis industry. We'll talk a little bit more about the economic positioning later, but it's really an exciting opportunity for real estate investors, for private money lenders to get into a game and participate in an expanding industry and develop wealth. So I started a company called Basecanna, and Basecanna serves 2 distinct clients. We serve cannabis entrepreneurs, who I like to call member operators, and we also serve investors. So for cannabis entrepreneurs, operator members, they participate in our cannabis ecosystem, and we get them connected to each other and investors. Part of what's unique about our seed to sale cannabis ecosystem is that we develop a community. So we're connecting cannabis operators to each other and investors, but we're also helping them focus on what they do best by removing a lot of the operational headaches that a lot of entrepreneurs experience in the cannabis industry. For instance, we're doing the legwork and we're finding real estate, we're acquiring real estate, we're acquiring the licenses, and we're providing wraparound service support in all license and business categories. So if you're a manufacturer and you have a manufacturing issue, you can essentially call our hotline and get support. Cannabis is a very heavy regulated, compliant-driven industry. We have support for compliance issues, for insurance issues, for accounting. So in essence, we create this irreplaceable value to our member operators because we give them a chance to do what they do best and give us a chance to support them so they can focus on their craft. For investors, investors are excited about what we're doing because we're vetting real estate and we're vetting operators and their companies. So we're targeting investors in high segment, high performing cannabis segments. And we're doing our due diligence and creating opportunities for investors to not only invest in asset-based real estate, but to invest in companies that have high performers who are participating in the high value, high growth segment of the cannabis industry. So we serve cannabis entrepreneurs, that are become members of our cannabis ecosystem. And we also give investors an opportunity to invest in one of the most rapidly growing industries since broadband internet.
Nice. Awesome. Yes, absolutely. No, there's a big opportunity here. So now let's start with the land side. How do you find the land deals and how do you bridge that gap between your infrastructure, the business side that overlays on top of the land? Or is that am I using the right terminology there?
Well, land acquisition is certainly one element of looking at acquiring, real estate for the cannabis industry. But there's a lot of other commercial industry warehouses that we're targeting as well. So part of how we're targeting real estate is it's important to have an analysis of what cannabis sector is going to be performing. Because you've got to remember, not all real estate, even though there's a lot of real estate opportunities that abound in this industry, not all properties are going to perform the same. And some are going to drastically outperform others. So when we're thinking about which properties and sites to target, we first step back and do more of a bigger kind of meta-analysis on the cannabis sector. So Canopy did a presentation at ArcView in San Francisco in July of this year, so just a couple of months ago. And they provided a vertical analysis. And their analysis confirmed what we anticipated to be the high-performing cannabis sectors. So if you look at distribution, cultivation, manufacturing, and retail, the cannabis sector that is predicted to perform either moderately or strong across all cannabis verticals is manufacturing and processing. And if you look at consumer trends, I mean, we've known this for a couple of years. The consumer trends are moving in the direction of manufactured products. So right now, our acquisition strategy is actually focused on warehouses because we're looking to develop sites and campuses for manufacturing.
Yeah, so it sounds like it's a very capital intensive business. And from that perspective, right, to try to find that land and everything, right?
Absolutely. So you can find the land and build the warehouse structure on it. There's some entrepreneurs, they need 5,000 square feet of space. That's great. But when you look at land entitlements, and the cost to actually build is oftentimes way more than the cost to, reposition and redevelop an existing structure. So do we pay attention to potential land acquisition? Absolutely. Have we looked at them? Absolutely. But we have found that the cost to reposition an existing warehouse is far better than acquiring land. And then obviously the speed to revenue is better too, because we don't have to wait for land entitlements and all that it takes to actually construct a new building.
Got it. Okay. Because it's so capital intensive, I'm assuming you're going after a lot of investors then, because it's going to take pretty much, as I said, a lot of capital to put this stuff together. So what does an investor expect to achieve in terms of investment in this opportunity that you're putting together?
Sure. Awesome. Before I answer that question, let me make it clear that Basecanna provides really 3 investing opportunities to investors. So 1, investors can choose to invest in real estate. 2, they can invest to choose in the operating company. Or 3, they can choose to invest in both. What we're seeing in our campuses is an ROI, so an annualized return on investment. For our real estate, our modeling is showing 20 to 25%. And for the operational company, we're seeing around 40% annualized. So if, let's say you have an investor who invests an equal sum in both real estate and the operating company, you're going to be looking at a blended rate of around 30 to 35% annualized return on investments.
Nice. That's pretty good. Nice, healthy return there.
Yeah.
Yeah. And now as far as due diligence is concerned, you already pointed out this is a heavily regulated environment. What sort of due diligence takes place, I guess, not only on the properties, but also on the operators as well? Like, how do you know Cheech and Chong are not going to get involved and start a grow or something like that?
Let me first talk about the real estate acquisition due diligence, and then from there I'll layer on the member operator. So there are a number of factors you have to think about when you're doing your real estate acquisition. I did share the larger cannabis sector analysis. So we want to make sure that we're acquiring the right kind of property that's going to be positioned in a high value, high growth cannabis sector. But once we do that, so now, for instance, let's say, okay, we're looking at manufacturing, which currently is our focus. We do look at other acquisition deals, but right now that's our focus based on our sector analysis. So once we do that, we have to think about the tax treatment of different municipalities. For better or for worse, a lot of people were willing to be taxed heavily just in order for cannabis to be adopted and to be legalized. Well, there's been a huge impact on that. When you're running the financial modeling, the taxes can be a really huge hit. You're seeing some municipalities that are allowed to tax up to 15% of gross receipts. I mean, it's going to be really hard to be financially viable in a municipality that's taxing such high rates. Berkeley used to tax 10% of gross receipts, but they quickly understood the limitations that they were having on the business community, and they shifted it down to 5%. In our financial modeling, we can make 5% work, but not 10%. So before we acquire a particular property, we absolutely do a due diligence on the tax treatment of that municipality. We also think about its strategic location relative to the larger ecosystem. For instance, we're not necessarily looking for multiple manufacturing sites within a 50 to 100 mile radius. We want to be strategic. Our acquisition ecosystem strategy right now is targeting California. It's the 5th largest economy in the world. There's 40 million people that live here, and it's anticipated to be the largest cannabis economy, in North America and the world for a time to come. So we are building our ecosystem here, but we're also looking in other states, such as Michigan and New Jersey. But speaking of in California, we look at the strategic location of the campus relative to the other campuses. And then the other big important piece that we look at for the real estate acquisition is we pay attention to the relationships that we can develop actually with the city. So we think about the city as our business partners. The fire department, the police department, the zoning department, and the planning department within the cities, they in essence are your business partners. And especially as this industry is emerging, there's a lot of bumps and a lot of twists and turns. And if you have a municipality that's eager to have you participate, that's excited about your potential tax revenue, it does make a pretty big difference in choosing where the real estate goes. The last thing I want to say about the real estate is you want to make sure that you're buying real estate, it's the right product in the right market. For instance, in California, Northern California is known for its outdoor grow. You don't necessarily want to put 100,000 square foot processing facility for outdoor grow in the Bay Area. You want that facility to be more strategically located closer to the source of the product. So we also have to really pay attention to the right product in the right market. So that's the real estate piece. Do you want to hear a little bit about how we do our due diligence on our member operators?
Yeah, absolutely. Absolutely.
All right. Now, I could spend 10 minutes talking about this, but I won't. Okay. We do blog, and I am going to be writing an article specifically about this. So I'll just give the highlights. Member operators, there are basically 2 kind of member operators that we interact with. 1, the more experienced member operator, and then 2, the cannabis member operator who's excited about participating in the industry. And while they may have business acumen in another field, they're fairly new to the cannabis economy. So either way, we like to see some traction in the cannabis economy. There are some members that have more than two decades of experience working in California cannabis. And we have other member operators who have less experience, but they can demonstrate business traction in another industry. Landlords need to understand that, while we discount that a bit, we don't discount it as much because it is an emerging industry, and successful business acumen demonstrated in another industry does count. It tells us something. So in general, we vet our operators in 4 different categories: legal viability, financial viability, business viability, and community alignment. So real quickly, legal viability: is your entity status up to date? Let us see a little bit of your tax payment history. A fast way for operators to be, targeted by municipalities and put out of business if they don't pay their taxes. So that's one of several things we look at in legal viability. Financial viability: you essentially vet a cannabis operator as you would any commercial cannabis operator. You look at their income tax, their balance statements, their bank statements. Many cannabis operators can show bank statements, financial statements and personal holdings outside of the company. So it's similar. What's unique about vetting a cannabis operator really is its business viability. And that's because the business of cannabis is very unique to other typical commercial cannabis operators. So for instance, part of what you're going to want to vet in a cannabis operator is a supply chain verification. While Basecanna grows and our community grows, we'll be able to support cannabis entrepreneurs in their supply chain verification. So for instance, manufacturers need to have access to oil, to distillate. They need to have access to flour. They also have to be able to move their product and have access to a distribution channel that's tied to retailers. So when you're vetting your cannabis operator, supply chain verification is really important. Do they have access to the supply chain, and to what degree? And how can our ecosystem support them? Compliance is such an important part of cannabis operations and the cannabis economy. So what is their orientation towards compliance? And branding and marketing, again, I'm not going to give you the whole list, but I'll talk a little bit about business viability, talking about branding and marketing, because a lot of people don't pay attention to this. So right now, cannabis entrepreneurs, if they were able to have product right when the regs opened up in January, they had an advantage. They had a competitive advantage because there were a lot of people that were not on the shelf. So if you were able to get on the shelf, you automatically had visibility. But as this year progresses and as next year progresses, you're going to start competing against brands. If you're not paying attention to what your branding and marketing strategy is, if you don't have a line item in your budget that pays attention to developing your brand, then that's a red flag for us around longevity in terms of their capacity to be able to compete as the market becomes more competitive. So again, we also pay attention to branding and marketing. And as I said, I could talk for quite a while about this topic. I'm going to be blogging about it and writing probably a white paper on it, so your listeners will have access to more of the detail. But that's a highlight about how we vet real estate and how we vet our member operators.
But it actually sounds like, as an ecosystem, there are many, many moving parts. And for someone to just come out of the gate and say, I'm going to become a cannabis operator is a little tougher. It's tough to do by yourself. So that's where leveraging Basecanna comes in that they're providing the infrastructure. You could focus on the creation of the product and maybe sales and marketing, for instance, right? And how you're going to move the product and not have to worry about all of the regs and eliminate that risk that comes with it. Because I imagine that because of the federal prohibition, all the taxation that comes along with it, everything else that comes along with it, it could be fairly risky if you don't know what you're doing.
Yeah, absolutely. I mean, it's capital intensive. And if you're not especially paying attention to compliance, there absolutely is risk. In fact, I believe that OSHA is riskier to cannabis operators than the federal government, believe it or not. And again, I can talk about that issue for a long time. And I actually do have an animation video on our website that talks about federal prohibition. And in essence, what I want to say about federal prohibition is the more you know about it, the less concerned you are. And if your operator is compliant within your state, the risk of federal interference is incredibly small. And most people don't realize that there's a federal protection that coexists alongside federal prohibition. So is cannabis prohibited federally? Yes, it is. But there's also a Rohrabacher-Blumenauer amendment that protects cannabis operators. It's an amendment to the spending bill that doesn't allow the DEA to go after any cannabis companies that are compliant within their state.
That's a big part of it, though. I mean, my background's all tech, and specifically around the debt collection industry a long, long, long time ago. And I know how those regulations can be somewhat overwhelming if you don't know them all. And if you're going to focus on what you do best, you want to have someone in your corner that's watching out for all that stuff, because you want to be busy making product and getting out there and pushing it, as opposed to worrying about OSHA and the federal government and the DEA on your back. Yeah, absolutely.
Exactly. For newer operators, part of our value proposition is that we lower the overhead and the barrier of participation. We come up with the capital to acquire and develop the property, to obtain the license. And then we also provide those wraparound services. So if you're newer to the industry, and let's say you haven't worked in a compliant-driven industry, well, we have expertise that understand compliance. We have expertise that understands how to support you to navigate OSHA. And, there are some experienced operators that still benefit from those services, but part of the value proposition that we offer is expansion. We are kicking up a lot of dirt. We're working every day to find properties, to find investors, to vet operators. And we provide a, expansion opportunity throughout California and then throughout the United States. So if you become a member of Basecanna in California, chances are you'll be able to operate pretty easily and quickly as we expand into Michigan, New Jersey, Oklahoma.
Yes. What are your thoughts around using this as a vehicle, as a hedge against an economic downturn? Because typically we talk about in the world of multifamily, how multifamily is a great hedge in the event of a downturn. I imagine that the cannabis industry won't suffer that kind of thing. Is that, you think that'd be accurate?
I would say yes. Like, the big answer is yes. Of course, it's nuanced, right? But your listeners may not know that I was doing multifamily. And when I saw that got a little bit more competitive and my 20+% ROI was kind of going down to, 16, 17, 18%, that's when I really started to pivot and see the commercial opportunity in the cannabis industry. I'm not sure if your listeners have a sense of the size of this market. So in 2016, legal cannabis sales in the United States were 4.6 billion. All right. That was in 2016. And this year, there's wide agreement across, the different intelligent community in the United States that it'll be 11 billion in legal cannabis sales in the United States. So BDS Analytics, one of the top analytic firms in cannabis, predicts that cannabis will be, I believe, 23 billion by 2022 and almost 50 billion by 2027. So just to help your listeners understand how big this industry is, let's see, movie tickets, like annual movie, or let's go music, like paid music streaming annually in the United States, $2.5 billion. Movie tickets, $11 billion. So we're looking at cannabis being a $50 billion industry by 2027. Cohen and Company thinks it may be $75 billion by 2030. So other industries that are that size, I mean, I hate to say it, cigarettes. Okay, cigarettes is like a $77 billion industry. Beer is a $106 billion industry. Nutraceuticals are like $70 billion industry. So this is a rapidly expanding industry. You haven't seen an industry like make 5 million and then have a compound annual growth rate of almost 25%. The last industry to do that was broadband internet, right? I mean, broadband internet posted 5 billion in sales, and then they grew at like a 29% compound annual growth rate for 5 years. Cable television did that in the 90s. It was a 19% compound annual growth rate. So just as like the internet kind of feels like a necessary utility in the home, along with like gas and electricity and water, the cannabis industry is becoming just a massive industry, and many people are turning to it for its medicinal values and its medicinal qualities. So just like we have aspirin in the medicine cabinet, chances are you're going to have some CBD oil or cannabis oil. I mean, THC has massive, huge, medicinal qualities to it, especially in treating cancer and sleep deprivation, believe it or not. The industry of cannabis is exploding. There are 31 states now in the District of Columbia that have legalized it. 9 states have fully adopted it. Full adoption is probably going to happen in Michigan this year. Oklahoma did it in June. So we're past the tipping point, and the rapid growth of this industry. There is going to be opportunities for years to come for cannabis real estate investors and just investors in general. Those who are willing to play in a little more risky game but get the higher return. I mean, it's just going to be an expanding industry.
Yeah, I don't even know if there's going to be risk. It doesn't sound like risk in the sense of the business as much as there's that stigma to get over, right? Because it's just been so shunned for the past 100 years or whatever it's been. If you've studied the history of this, which I'm sure you have, it's been largely shunned. And now there's acceptance, not only because it's medicinal benefits, but also recreation as well. People obviously use it as recreation for both, but I know that's not your focus. Regardless, the way I see it, there is no negative around it really, but it's aside from the stigma that's out there.
Yeah, stigma. I mean, and you do have to pay attention to the larger cannabis sector analysis. Like most analysts agree that cultivation is a race to the bottom as it becomes commoditized. So that's why we're not focusing on, land acquisition or acquisition for cultivation. Now, am I interested in greenhouse acquisition in the next 15 months or so? Sure, because when federal prohibition ends in California, I'm not interested in land acquisition for greenhouses, let's say in, Oklahoma, because Oklahoma doesn't have the status that California has in terms of cannabis. So when the federal prohibition ends, cannabis is going to be an export coming out of California, and there will be a value in cultivating. I think in particular in greenhouse, because you can create amazing quality flower at such significant reduced rates than you can, indoor grow. So you've got to pay attention, of course, and you have to make sure that you don't end up in a municipality that wants 15% of gross receipts, so there are some risks. But in terms of seeing this as an industry that's going to have plenty of opportunity. Oh, yes. For years to come.
No, it's going to be huge. So now what sort of deals are you working on these days?
We are working on developing a manufacturing facility in Los Angeles. We have a property and we're looking at about a 20 to 25% return if you're just interested in the real estate, and a 40%, return on investment annualized if you're looking into the operations. We're really excited about LA. They haven't lost their minds like a lot of municipalities. Their tax treatment is enticing and will support businesses to be successful. And obviously, Los Angeles and the Los Angeles Basin is one of the biggest cannabis consuming areas in California. So we're really excited about our property. We're very excited about our business plan. And that's the LA campus, the LA site is definitely something that's exciting and fun to look at. And I'm also going to talk about an amazing operator who has decades of experience in cannabis. I'm going to talk about Brennan Thicke. They know about Brennan. His dad was Alan Thicke. He was the actor, from Canada. If people are in their 40s, you may know Growing Pains. He was the dad on Growing Pains. And his brother is Robin Thicke, who's a very well-known musician, pop musician. So Brennan has 2+ decades of experience in California cannabis, and he comes from a family who has really deep ties to the entertainment industry. So Brennan sold a couple of his dispensaries to MedMen. So MedMen was the first cannabis company to get the title of the unicorn. They reached $1 billion valuation. They're one of the fastest growing cannabis companies, in the United States. So he had a couple dispensaries that he sold to MedMen. And then about 1.5 years ago, he's been a cultivator. He's also been in the dispensing industry for a couple of decades. And he said, what do I want to focus on now? He saw the opportunity in manufactured products. He saw the opportunity in concentrates. So concentrates are one of the subcategories in manufactured products, and then there are even subcategories within concentrates. But I'll tell you really quickly, vapes are a huge, huge trend in consumption, especially in California. So 70% of all concentrate consumption in California is through a vape pen. But it's a young industry, so the quality isn't very good. Well, Brennan leveraged his 20+ years of dispensing experience. He really understands consumer trends, and he started a vape pen industry called Mixmasters. So what's unique about and beautiful about Mixmasters is that he's leveraging his connections within the music industry, and we're in conversations with a few bands that have A-class bands that have 30 million plus viewers who are going to be looking to market vape pens. So Mixmasters is a vape pen opportunity. There's that opportunity that currently exists with us. There's more information on our website. I'm really excited about that opportunity because of the quality of the operator, the experience of Brennan, the massive returns that we're looking at in that category. That's a very high performing, high growth category within cannabis. And we're in California. We're in the stores. We're looking to expand to Nevada. So there's actually still room in that raise, and it's an exciting opportunity for investors to come into a very well-established operating company.
Excellent. So for that specific opportunity, like, is there a minimum or something, like as far as investment is concerned, like a 50,000, 100,000? How does that work?
That's great. Yeah, our minimum is 75,000 for that opportunity.
Okay, good.
Yeah, and we want to be, accessible. Sometimes we have $50,000 minimums, but we're trying to stay this between 50 and 100 is a minimum. There's also another campus that we have in Lake County that is positioned to be the huge manufacturing facility for Northern California. That's a very exciting campus. It's going to be a huge manufacturing facility. So if you're interested in that, that's also another deal that people can check out on the website.
Okay. I imagine they can also use a self-directed IRA for this as well, right?
Absolutely. We've already accepted investor funds from a self-directed IRA.
Nice. Excellent. That's a good opportunity. So I might have to take you up on that.
Yeah, for sure.
Now let's go into the mogul round. So in the mogul round, what we'll do is I'll ask you questions about you and get to know you a little more. You ready to go?
I'm ready.
All right. Excellent. Okay. So if you can give your 20-year-old self a word of advice, what would it be?
I would say figure out what your passion is and be able to describe that passion and quantify that passion and set some goals and believe in your capacity to do it and network. Get out there and talk to anybody who's interested in your passion and things will start to click.
Yeah.
Yeah. I mean, there's so many things I could say about that, but that's always up at the top of my head now.
It's so true too, right? It's so true.
You know what? Actually, here's another piece of advice that I wish my 20-year-old self would have seen when I was 35. Because I'm driven by impact projects. And so when I was 20, I was like, all right, it's really important that if we call ourselves a democracy, we have to have good educational institutions for all of our citizens, right? So I kind of collapsed making money on my passion projects or my impact projects. And what I wish I would have done is I would have separated the two and started my real estate investment career in my 20s and realized, hey, I can create passive income and simultaneously pursue my impact projects. I don't have to necessarily try to monetize my impact projects. Like I can do both. Now I'm doing both. I mean, I now obviously have a passion for real estate and I have a passion for working inside of cannabis, but I also have my impact projects that I pursue simultaneously. I still do some work in schools in particular and financial literacy.
Excellent. So what would you say is your most influential book and why?
I'm going to go ahead and say Traction by, is it Gino Wickman? Is that the...
That's right.
Yeah. And I suppose I'll say this. So I consider myself to be a professional reader. Do I like fiction? Yeah. But I don't read fiction that often because I'm really focused on developing my craft and being able to develop my capacity to, support companies and to have the proper kind of meta and micro analysis of particular industries in their fields. So Traction, I thought, did an amazing job of combining the insights of multiple books that I have read. So just to give your readers a little insight on where this is coming from, in the world of education, I've been an entrepreneur since middle school. I had companies in middle school. But when I graduated from college, I took my entrepreneurial spirit into the world of education because I cared about poor people getting access to a quality education. I actually grew up poor, but I grew up in Iowa and they invested in their public education and it made a huge difference for me. It was everything that I got access to a quality education. When I was doing my work in education, I ended up designing schools, but then I also went into some underperforming schools and I transformed underperforming schools. And I worked at the intersection of leadership, learning, team development, strategic organizational vision. Like I worked at that intersection in order to create better outcomes for organizations. So I read a lot of books about that, right? But I believe that Traction did a great job synthesizing so much of the insights in terms of how you approach a company. And granted, a lot of the books that I've read are for the for-profit sector, so I've always had to apply them into the public sphere. And you can do that too with Traction. But I just thought that Traction was an amazing overall conceptual framework for how you build and sustain and grow a successful company.
Yes, I know Traction quite well too. Yeah, it's a great book. So what is your philosophy for life and success?
Oh my goodness. My philosophy for life and success is relationships first. So it's really important to tend to your relationships. You've got to nurture yourself and take care of yourself. You've got to nurture your family and tend to those relationships. And when you've tended to those relationships, good things happen. Obviously, from a familiar point of view, you have a happy, productive family, and that contributes to everything else. As from a business point of view, I often notice that there are a lot of businesses that are technically savvy, and they really understand the technical pieces of what they're trying to accomplish and the technical operations of getting there. But what I've noticed is there's a lot of businesses that are relationally weak. They don't understand how to nurture relationships such that people can communicate in an effective way, which of course drives results. So relationships are really important. And from a business point of view, one way that you show that you care about relationships is that when you bring people together, you spend good time making sure that that meeting isn't the death of the organization, but the birthplace of amazing thinking and magical, connections and strategic insights. I think that people oftentimes fail to pay attention to relationships, and they fail to pay attention to creating the conditions to have fruitful conversations.
Excellent. Well, guys, if you want to follow up with Leslie, you can reach her at our contact page at basecanna.com. I hope you guys got a lot of insight on the appreciation of property once it's licensed for cannabis, and you can learn that now is the right time to get into cannabis real estate. Thank you so much for your time, Leslie. I really, really appreciate it.
Augustino, it was a pleasure. It was a great talking with you and your listeners. Thank you.
Thank you for listening. We hope you enjoyed the Bulletproof Cashflow podcast. For more free podcasts, articles, videos, and resources, go to www.bulletproofcashflow.com.